Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 7th of April 2016 and we're briefly looking at the impact of negative interest rates on the price of gold. The expectations of interest rate hikes by the Federal Reserve was one of the greatest factors weighing on gold prices in 2015. An increase in interest rates diminishes the appeal of gold, which doesn't pay any dividends or interest. So a lower than expected interest rate would be positive for gold prices. The Federal Reserve Chair Janet Yellen noted on February the 10th that the risks to economic outlook could delay the central bank's plans for raising short-term interest rates. Yellen added, quote, "Financial conditions in the United States have recently become less supportive of growth, with declines in broad measures of equity prices, higher borrowing rates for riskier borrowers, and a further appreciation of the dollar." Unquote. Similar dovish comments in March and then again yesterday further supports this view. So despite quite positive job figures, the Federal Reserve is indicating that there are only likely to be 2 interest rate rises this year as opposed to the originally planned 4. Our view was that 1 was almost definitely going to happen and that although 2 is possible, we doubt it will actually come about. Interestingly, federal funds futures, which are used to hedge interest rate risk, are also factoring in a maximum of 1 interest rate hike until the end of 2016. The Federal Reserve has asked the banks to prepare for the possibility of a negative interest rates policy, or NIRP. Currently, it is being done as a stress testing scenario to see how the banking system could be affected by it. This means people are charged on their deposits with banks, and banks are charged for their deposits with the central bank. This dissuades idle cash balances and artificially boosts demand. Many analysts see negative interest rates could extend to bonds, which could be beneficial for gold prices. Even the World Gold Council highlights 4 reasons why negative interest rates will structurally increase demand for gold as a portfolio asset. 1. It reduces the opportunity cost of holding gold. 2. Limits the pool of assets some investors and managers would invest in. 3. Erodes confidence in fiat currencies due to the threat of currency wars and monetary intervention. And 4. Further increases uncertainty and market volatility as central banks run out of effective policy options to combat inflation or deflation and/or spur growth. In addition, gold typically rallies on expectations of increasing inflation. However, gold as an asset class benefits when investors think that central bankers cannot contain the inflationary or deflationary threats. Currently, market participants are highly skeptical that the policymakers can actually boost inflation. Lower commodity prices, currency wars, and a slowdown in industrial production in the major world economies are leading the global economy into a state where deflationary pressures are rising. In a deflationary environment, people lose faith in fiat currencies, which are not backed by anything tangible other than government promises. Deflation also leads central banks to take drastic measures to kickstart the economy, such as quantitative easing and cutting interest rates. However, with most of the developed world at zero bound already, central bankers might go for negative interest rates, as mentioned earlier, and further quantitative easing. This could increase market uncertainty, which usually sees investors rushing in to park their money in safe haven assets such as US Treasuries and gold. So, does this mean that gold prices will inevitably rise, and soon? Not necessarily. Should global economic activity increase and world economies pick up, then we shall undoubtedly see further stock market increases and a move away from gold, though silver may actually benefit from that scenario. More likely, we suspect that such improvements, if they do occur, will be slow and small. The one aspect we believe is pretty well determined, and that is, even if we see higher US interest rates, it does not change the outlook for very low and negative global interest rates elsewhere. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.